if you're trying to play an infinite game, which was always sort of the only game that made sense to me, then first you have to survive, or as racing drivers often say, to finish first, you first must finish. And so this question of how do we make sure no matter what happens, we survive, otherwise we can't keep playing the game, seemed a logical, first question to answer. And so that's really, if we divide what I do now and how I invest, we really answer two difficult but simple questions. The first is, how do we survive? Which I would define as being resilient to many, many, many different potential future states.
Right.
And then the second is, how do we expose ourselves to wise ways to accelerate the growth of wealth?
Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil Baranowski, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable quality businesses while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on this show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. My guest today is John Candeto. John is the founder and managing partner of the Phronesis Fund. He's also the co-founder of JoinWDA, Workforce Data Alliance. Tom Morgan connected us. We met at Markel's meeting in Richmond earlier this year. I've been looking forward to this conversation, and you will see in a moment why. We talk about the importance of survival, the power laws, the study of complexity in investing, and so much more. Please help me welcome a very special guest, John Candeto. Hi, John. How are you? So nice to see you.
Wonderful to see you. Thank you for having me.
So we met in person at Markel a few months ago, and time really flies because I thought it was yesterday, but it was a while ago. And you had a nice summer, I had a nice summer, and here we are chatting. And we were introduced by Tom Morgan, who is a wonderful guy, good friend, just a great spirit, and he's up to some interesting things these days. He loves talking about curiosity, and he was a guest on the podcast. But John, I wanted to have you on the show because we had a fantastic conversation at Markel with some loud music in the background at the event after the main event.
Yeah.
And I've been reading a lot of your writing, and I find it very moving and inspiring. So I really wanted to have you on the show and ask you more about it. But I'd like to start those conversations from the very beginning, if you let me. And I know a little bit, but I'd love to learn more. I'd love to hear about your childhood and upbringing, those early days, and how you think that time shaped you. And I know it did.
Sure, yeah. I'll summarize, and you can double click where you like. I was born in California, but moved to Florida from a very young age. Mostly grew up in the Central Florida area. My father served in the U.S. Air Force. My mother was an educator. And I, by you could say for the time I was born in the 80s, had I'd say fairly typical looking suburban American kind of upbringing. Raised in the Christian tradition, raised to think, folks would say think well, but think independently, think for myself. Lots of focus on education, lots of focus on hard work, lots of focus on work as an act of service. That has, some specific things. I attended some fairly unique schools growing up, classical schooling, the classical tradition, which is really modeled after sort of the Greek tradition. Namely the focus on it's sort of a movement against reductionism. So, to learn physics, you kind of flip a bicycle upside down, spin a wheel, and say, let's figure out what the equation is that can define this movement, rather than memorize the equation and apply it. So it's kind of the conversation between disciplines, or the thin walls, if any, between disciplines was fairly common, both at home and in the way the schooling I was a part of. That led to, probably unsurprisingly, to college in a liberal arts university, where that kind of continued. And then it was off to see the world. So I had not left the U.S. until I was in college, and I went over to India for a month and went all over the place and was shocked, really. I'd never seen so much wealth and so much poverty, and all right next to each other. And I had no idea how to handle it. But once I kind of got through some of that, I decided the world is big and awesome and terrifying, and I need to go see more of it. And so post-college, I never looked for jobs in the U.S. My first job was in Singapore in strategy consulting. And in a way, my joke is consulting is sort of professional job shopping, because as a consultant, you go work for a lot of different industries and a lot of different businesses, and you get to see, my big learning was the businesses that were shiny and had the large marketing budgets and looked amazing. You go work inside of them, and they're all loosely functioning disasters, right. All of them. And so I kind of got to see, what a business looks like versus what it actually, is in terms of operations and opportunities to improve. And so did that for a while, and then we can go further there. But that was kind of childhood up through sort of college.
I see a lot of great foundations for an investor. Learning from so many fields, then being in so many businesses, then the work ethic that you grew up with. And I love the idea of serving people, because we were both in the business of serving other people. We're helping them in a very particular way with something that's very important to them, their wealth, their well-being. So I see all those building blocks. So I have to ask you, at what point and how did you discover investing? How did that come about?
So my father was what at the time, in the 80s, was called a stockbroker at Merrill Lynch, after he retired from the military. And so I remember when I was very young, in the evenings, the CNBC, the ticker, tape would run across the bottom of the screen, and kind of watching it, I would have been like 6 or 7 or 8, and sort of watching this and thinking, that looks really interesting. No idea what's going on, but CNBC, probably still today, I don't know, but definitely in the 80s, it just looked wildly different from anything else. And it sort of, it made me very curious. But my father passed away when I was 10, and so I never got to learn much from him as an investor, other than I knew he thought highly of this guy called Warren Buffett, who I didn't know who that was, and I knew that he had served clients through managing their wealth and so on. And so years later, so when I kind of college onwards, really, I started to learn about investing the way that, a lot of people who are curious and who start to have some money to manage, learned. I just started reading everything I could, and I, read all of Buffett's letters, and eventually started going to the meetings in Omaha, and kind of started to put the puzzle together for myself. And then, years later, that turned into launching an investment partnership, which is what I run now. But the seeds were sort of, the curiosity was, kind of stoked early in life. And then As I was doing other things, so management consulting, and then I was part of building a technology firm for a decade. It just was the well that just is deeper and deeper and richer and more compelling. And so eventually that became the business, but it was really the interest that became the hobby, that became the obsession long before it was a business.
Well, I love the sound of that. And I find it very relatable because to me, investing was something that I found very intellectually stimulating. So I picked up One Up on Wall Street by Peter Lynch, and Buffett is mentioned in the book, and that's how I discovered Buffett. But to me, I thought I could figure this out. And when I said that, I didn't mean I'll beat the market, or I'll be the richest person in the world. I thought, this is fascinating. It's like I'm solving a puzzle, and it's a never-ending puzzle. And the pieces will continue to change. The businesses come and go, and I know we'll talk about it more. So I'm curious, what drew you in? Like, why that field, and why it turned into an obsession?
I think it's in a phrase. It's the was it a Hagstrom book, Investing: The Last Great Liberal Art?
Yes.
In a nutshell, it's that. It's, if you had said to me, "Hey, John, there's this thing where all the variables are relevant, all of them, the social stuff, the quantifiable things, the non-quantifiable things, the psychological things, the hard factual numbers." And you have to decide what matters most and what matters least, and how to put the whole puzzle together. And you can get better at that by learning accounting. You can get better at that by reading a beautiful poem. You can get better at that by traveling extensively around the world and just learning how our humans think and reason and fail to reason. You can get better at that by just being a thoughtful consumer of goods and services. You can get better, I love that. And so I think I mentioned before we hit record, part of our family's summer was going and traveling and using some services in the process that were also investment due diligence, but I wasn't doing that to create work, and it didn't feel like work. It was just, kind of going and trying new things and saying, oh, this is, maybe other people like that, and maybe there's an investment to be made here. But even if there isn't, I get to hang out in another part of the world and meet some new people. And I think I summarize all of that as long as our brains stay intact, I find it amazing that we can be the best investors we ever are the day we die. And so this kind of ability to play as long a game as we possibly can and get better and better and better is just very compelling. So that's what keeps me around.
I like to call it the infinite game.
Yes,
it really has no end, especially if you think about multi-generational wealth. I work with families that have had wealth or aspire to have wealth over multiple generations, and when you see it as an infinite game, it completely changes the framework.
Very much.
What you talked about, it sounds like a permission to learn, kind of an endorsement. Go ahead and learn anything you want. It's not just for a test or an exam or anything like that. You learn for the sake of learning.
Yes.
And the other thing that I want to highlight is I see the stock market, and I know that you do too, as a way to become an owner of businesses. And it sounds like a very simple idea, but it's not, because through most of history, if you had a business opportunity, it would be for you and your family. You were in a particular trade, you were a shoemaker, son of a shoemaker, and your kid will be a shoemaker. It was very closed and sealed in many ways, even regulated in many ways throughout history. And the stock market is very different, because it doesn't really matter if you know somebody, if you're part of a circle, any circle. You just show up and you say, I really like this business. This makes sense. And I like the people who are running it. And I like the product that they provide. And the price makes sense. I'd like to become an owner. And here you are. You show up with the smallest amount you can find to buy a single share. And here you are, an equal partner in a business with somebody else. And I like this interview that Bezos gave, and somebody was pointing out that he has so many billions of dollars, and he says, think of everybody else that owns the other, whatever it was, 85% of the shares of Amazon. Or now probably it's 90%, whatever.
Yeah.
And I thought that's such a powerful way to look at it. He says, look at the wealth that was created for the other 90% of shareholders of this business. And you could apply that.
I think I've seen that interview, and I think that I think Amazon was around $1 trillion, dollars of market cap at the time. And I remember him saying, I created $150 billion of wealth for myself and $850 billion of wealth for other people.
Yes.
And in some ways, that's the ultimate democratization of wealth creation.
Yes.
To be able to operate at that scale where effectively that's open to, a plurality, probably a majority of the world now. It's not perfect. Mm-hmm. It's not, it's got a long way to go, but equally, if you'd said, even 100 years ago, if you had said, hey, we're going to evolve in a way where billions of people can grow wealth in exactly the same way as the most capable wealth builders of the time, I think that would have been hard to see 100 years ago, but here we are.
I'm thinking of Carnegie and U.S. Steel being the first $1 billion market cap back in the day, over 100 years ago. It was held private all the way until late. And a lot of businesses were held private. And having a public market in wonderful businesses, it's something unique. John, I want to ask you about the particular kind of investing that you do, that you are attracted to, and how much you can share about your philosophy in maybe broad terms at first, and then we can dive in.
Yeah, absolutely. So, and this is another, a lot of this comes out of this kind of constant attempt to move against reductionism. So for example, I spent a decade building an enterprise software as a services business, and there were multiple periods in that business where I don't think I would have believed certain things if I wasn't living them. So one simple example is, we had gross margins in excess of 90%. And, I had studied enough investing and accounting by that point where, in the context of human history, that means someone's lying or there's an error or something. Gross margins in the 90s are not a natural state for a world rooted in atoms. But we're now a world rooted in bits. And so the digital nature of what we were doing meant that was real. And that stuck with me, just this whole, the way that we can account for and also can fail to account for zero marginal cost of distribution, zero marginal cost of lots of things was very interesting to me. And this whole broad shift from, a world rooted in tangible assets to intangible assets. And so, that stuck with me. Another thing that stuck with me was kind of what you hinted at earlier. If you're trying to play an infinite game, which was always sort of the only game that made sense to me, then first you have to survive, or as racing drivers often say, to finish first, you first must finish. And so this question of how do we make sure no matter what happens, we survive, otherwise we can't keep playing the game, seemed a logical, first question to answer. And so that's really, if we divide what I do now and how I invest, we really answer two difficult but simple questions. The first is, how do we survive? Which I would define as being resilient to many, many, many different potential future states.
Right.
And then the second is, how do we expose ourselves to wise ways to accelerate the growth of wealth? And that is kind of coming at things from the other side. But if you study, let me tell you what I observed as a business builder. So over the course of a decade, we built software that had hundreds of product features. And over time, what I realized is a handful, and I mean a small handful of those features clients loved and they used all the time. And 90+% barely got any airtime. And an error we made was not stopping investment in those features soon enough, because they just didn't matter. And I noticed that that pattern start to repeat many places. So we hired hundreds of employees. And the nature of the firm being what it was, the best performers, this may be a little bit of hyperbole, but not much, probably could have run the firm by themselves. And the worst hires tried to sink the firm, basically. And then there was a big middle. And I'm not at all trying to make the point that most people don't matter. I'm trying to make the point that when the fit worked, it worked phenomenally well. It was highly geared, highly levered, not financially, but highly levered to the work we were trying to do. And when the fit didn't work, it was highly destructive. And then there were a lot of cases where there just wasn't enough of a fit, and we weren't wise enough to sort of say, this isn't a great fit, let's try to get a much better one. And so my point is, I saw this pattern show up in people, in products. The top handful of our clients paid all of the bills. The most vocal of our clients took up all of our time. So I started to see this product or this pattern repeat, where a very small handful was carrying all of the weight in both the very positive direction and the very negative direction. And by the way, I saw that same pattern in management consulting. A lot of consulting is kind of take a product or a service or a market and slice and dice it and figure out what's working and recommend cutting the rest. And it's a logical thing to do. It's just that the world doesn't do that much. And I think part of the reasoning is, people hear of things like 80-20. I don't think most people take that seriously enough. And I actually think 80-20 in many cases is more like 99-1. And so to answer your question, I realized looking at my own portfolio as an investor, I made a handful of investments that carried us or myself way up. I made a handful that brought me way down. And then there were a bunch of things in the middle that just didn't contribute much in either direction. And so my point is, if you first answer the question, how can we survive for generations? Then the next logical question is, if we've ensured survival, how can we wisely grow wealth? And in that sense, that is maximizing the surface area of exposure to potential power law outcomes. It's very likely that I expect that for that side of investing, there will be a handful of investments we make that, if we're fortunate, will do phenomenally well, and probably a great deal we make that just aren't very, accretive. And so, but those are really the two questions. It's survive and then expose yourself to power law type outcomes. And, that should mean our outcome space is somewhere between we're still around decades from now, and we're still around and substantially wealthier decades from now. Obviously, we hope for the latter, but that's sort of how I frame it.
I love the two parts, because a lot of people get into investing to get rich, because it seduces them, the ease of things, and it's not as easy as it seems, we both know. But they forget that you could actually lose, and you could completely fall out, and you could have a total wipeout. And when I say a wipeout, if you lose 80-90% of what you have, more than half, it's going to take time to get back. And not just financially speaking, but also emotionally, psychologically. I think the psychological impact of losses is very big, and it can be, you don't see it on the balance sheet, you don't see it on the statement, but you carry it with you. So I think it's very important. I have a couple of rules that help me in life and in investing. One of them is not having zeros in the portfolio, which, I mean, if there's any investment that I could imagine, obviously, my imagination, I have to put it on pause a little bit, but I can't imagine it going to zero, right? It's a solid business, solid balance sheet, good people running it. Unless it's a fraud that I'm completely misreading, the odds of this going to zero are non-existent. Now, if something has a lot of leverage, the people I don't really trust, and if there's secular decline in the industry, the business is shrinking, the odds are improving that this could be a zero if too many things line up, right? So that's how I look at it, and I like to eliminate. But I love the racing analogy, and I had Luca Delana on the show. We talked about game overs, how I'm sure you're familiar with those ideas. How
very much, yeah. He's a friend. I've learned a lot from him. The whole rabbit hole of ergodicity is what pushed me further and further into the survive first and then thrive. Just even the simple thought experiments from ergodicity, where there are lots of ways you can have incredibly high expected value for a portfolio and still end up with a zero. And so I've learned, and that's one where, I studied corporate finance at the London School of Economics, and I did that. I did a master's, and I did that partly because my reading of risk management, like financial risk management tools, and just the architecture of things like a Sharpe ratio and so on, none of it really made sense to me. But I knew I was an outsider to the industry, and so I thought, all right, well, let's go where some of the guys cooked this stuff up, and let's see if I still think it makes sense or not. And long story short, it made no more sense to me inside the halls of LSE than outside of them. But what was very helpful was I got to have some very direct and deep conversations about how those things are architected, why they're popular, and why they continue to be popular. And it certainly would be unfair to say that the folks who use them and support them aren't aware of their weaknesses. But show me the incentives and I'll show you the outcomes, right? There are incentives that sort of keep these things in place. And even if you just, to your point on playing infinite games, most, the thing I think about is something like 90 to 95% of invested capital in public markets is rewarded or punished, meaning the managers are paid or not, on a time horizon less than a year. And so when I just work backwards from that incentive, lets you do things like equate volatility to risk, because it certainly is risk to your paycheck if you're trying to get paid every quarter.
Right.
And so but that's also partly why I reject most of those things and kind of flee the other direction of we need to survive and hunt power laws. And we just have to set ourselves up as a firm, as a community, as, even just a practice of how we compose ourselves, where we're comfortable with what that journey looks like.
You're touching on so many things, but first of all, volatility is not risk the way you and I see it. That would be number one. To me, the risk is that I bought something, it's worth zero, and I just lost money, or it's down 80 or 90%, and it's a permanent loss of capital. That's, to me, the risk. How I get from A to B, if I have a 10x or a 50x or a 2x in the portfolio, it doesn't really matter if it's in one big move or if it's many ups and downs, but that's what volatility is all about.
Yes.
The other thing you brought up, which I really like, is the fact that when people think of investing, they say it's a very competitive pursuit. And I say yes or maybe yes but.
Yes.
Well, tell me about your time frame, right? Like if you and I were to make a little gamble, if the market will close up or down today, I honestly don't even know if it's up or down for the time being. And we bet $1, right? We probably statistically have a 50% chance, right? So it's a certain game to play. There are many games that humans play. It's okay. But the game that we choose to play, at least I'd like to play, it's a longer game. And in that longer game, and I've been in meetings with managements when I ask questions about even a 3-5 year window, and the management would ask me to stay after the meeting and say, you're the only one that didn't ask about the next quarter. Sure, and they were serious, and they said, nobody in the room asked about anything beyond the next quarter. And I thought,
yes,
when you look at that room, and it's smart people from great schools with great credentials from excellent companies, they're all asking about the next quarter. And here I am, because of my background experience, the kind of clients I work with, I could ask the 3-5 year question, which I don't even think is a long-term question. It's just, let's look out, let's raise our chin a little bit and look ahead. And I realized that I stood out in a room. So I'm thinking, if I have a 10-year view, I might be the only person in the room, right? Yes. So when you say competitive with who and how, and tell me more about this, how competitive it is. But if you can truly take a long-term view, I think the competition is just not there, not the way you think it is.
I completely agree. I also think a lot of this is poking at, this is a rough word, but a good one. What is your epistemology, or how do you know what you know?
Right.
And if you wanted to figure out, is a business really good or not? I think from first principles, you can kind of deduce, or you can do the thought experiment of, let's say that I gave you a set of financial statements at a point in time and then asked you, is this business good or not?
Right.
There are things you could see, like maybe it's way over levered and whatever, but for the most part, you actually need to observe any system, whether it's a business or a person or a product or service. You need to observe it over time and see how it behaves. And so there's this subtle but important distinction where classical or traditional statistics is, the word is frequentist, but it's built on looking at points in time and then trying to deduce from a handful of points what we can say about the general shape of the thing, they would say the distribution. And it's not that that's a good or bad epistemology, it's that is appropriate for some things and not for others. And roughly speaking, if we zoom way out and think, okay, how do we know what we know? in a lot of senses, if you start with the Greeks, they reasoned largely through things like geometry about things that we later learned how to do math on. And so they started with kind of the verbal tools of reason to figure out what they knew. And then eventually we developed math, and this led to Newton and Leibniz and others and Newtonian physics, right? And so then we got a grasp of mathematically modeling the world. And we got very excited about that. And so you hit the 1700s, now you're starting to get modern statistics, you get the normal distribution, and so then we start to say, wow, we can look at the height of John and Bogomil and a few other people and start to understand the distribution of the height of all humans. It's incredible. And it is all incredible. The problem is we kept going without evolving the tool set. And I don't mean statistics didn't get better, but we started to assume that a certain kind of frequentist statistics that is appropriate for observing and understanding some things applies to everything. And so the market sort of cynics about things like the VIX would say, well, it's like an airbag that goes off at stop signs, but not in car crashes. And we can sort of prove this now. And it's not that the VIX is a good or bad idea. It's that we sort of took a tool designed to measure points in time, but not continuous change, and applied it to something that needs to be observed as a complex system full of continuous change and other things. So we can go into complexity theory if you want, but we have better tooling. We just haven't quite figured out how to apply all of it to the sort of zeitgeist we're in, where we still sort of love traditional statistics, and that's kind of our primary way we learn things.
I know that you have some thoughts about the power laws that rule the world, and I want to ask about it, but I want to ask about averages, because my grandpa used to fish, and he would tell me that you can still drown in a lake that's a foot deep.
Sure.
And I thought of it as such a deep observation. So when people ask me these days, how's the economy doing? And actually a client asked me that yesterday, and I said, I have a much longer answer to that question.
Sure.
Because I don't know if averages stopped working even more so lately. I don't know. But I have this impression that maybe there was a time, imaginary time, when you could say the economy is overall just fine. I mean, everybody's doing fine. Everybody has a job. Everybody just got a raise. Everybody's putting in a pool. Things are just good. And lately, when you zoom in, you realize I can find you a company that's really, really struggling and has shrinking revenue and can't make the margins they had, and they have to cut people. And I can show you a company that's growing as if there was no end to their growth trajectory, and they're expanding, so they're all flavors that you want to see in the economy itself and how people are doing these days. So the averages, I feel like, I don't know if they ever worked. Maybe you were fooled a little bit. But they seem to work less and less. And I have a follow-up question about the stock market too, but tell me more how you think about it.
Yeah, it's a very good framing too. And this is another one where, averages are wildly useful in places where averages are appropriate. Right. And it's that last piece that I think we just often forget. So one of the reasons I focus on power laws is a power law is a distribution where it looks a little bit like an exponential curve, basically, but so most of the action is in an extreme minority of the total kind of plot. And so the power laws that people bump into every day are things like, if you look at the largest employers, publicly traded companies, you've got Walmart employs 1.5 or 2 million people. Amazon's up there. Accenture's behind them, but Accenture's sort of hundreds of thousands, not millions. And then this falls off very quickly to where you have, just an enormous amount of companies that employ 5 people, 10 people, 2 people, but very, very few that employ even above, say, 10,000. And so when you're in a territory like that, what's the average number of employees in a company is a completely meaningless question, because if you averaged it out, Walmart's going to drag it way up, and then my little firm is going to drag it way down, and you're going to get some number that means nothing.
Yeah.
And so then when you are trying to understand, what's really going on, one I say all the time, if you look at the history of our species for the last 10,000 years or so, or even the last few centuries, the 19th century in terms of economic output. In the 19th century, we created twice as much total economic output or value as in the 18th century. And before that, we basically went nowhere for a long time as a species. So we go nowhere for a long time, then suddenly in 100 years, we double our output. The century after that, we created more value as a species than all the other prior centuries combined. And then in the 21st century, so where we are now, we've almost, we'll know in about 10 years once we measured this all properly, but we've probably created almost as much value this century, even though we're only 24 years into it, as we did in the last century. And whether or not I'm right about those exact numbers is not the point. It's, if you were somebody kind of trying to understand humans and our ability to create things, and then you kind of said, okay, well, over the last 10,000 years, we had this century with, trillions in production, and then we had this century with effectively zero, and then let's average them. So on average, humans are making, whatever the number, it doesn't tell you anything. It's not real. But if you were an alien observing lots of species and trying to say something about them, it might be very convenient to sort of say, well, on average, each century humans create this, and on average, this species create. But and so that's the reason I focus on power laws. Is if you're in the domain of power laws, tools that are tempting to use like averages and medians and standard deviations and so on, they don't tell you anything real. And so you have to reframe your epistemology to, if we're not learning about something that is appropriate for those tools we can't use, then we have to use different tools and have different expectations.
I'm thinking first compounding kind of has the same effect. Those stories of Buffett making 95 or whatever % of his wealth after the age of 65, right? It's the kind of chart you're showing, probably the other way around, but that's basically the same thing. And the other thing is that we're observing it in so many places, not just with wealth, but the stock market. We have winners that are the size of 500 other companies that are behind them. There's something interesting that's happening you talked about the species, but within the different ways that we can observe the world we're in. And I don't know if that means this will correct and change and even out in some way, or it will become more and more pronounced. And you can dive into each of those stories. Now that we talked about intangible economy and how businesses are set up these days. But I remember one story from Peter Lynch's book that I read a long time ago, One Up on Wall Street, where he said how if a concept worked in the Northeast in the US, you would roll it out coast to coast. And so this was the end of like regional winners. If you had a regional family owned retail store, I don't know, a grocery chain, and went into a national, right? Walmart went national and Target went national. And so that was the phase. And then the second phase that we see, it just goes global. Everybody wants a cup of Starbucks coffee, not picked on anybody here, but whether you're in China or even in Paris or even in Italy, where you have so many other, I would say maybe equal or better options, people still want Starbucks. There's Starbucks in Italy, right? So it's fascinating how a concept, and here it's physical concept, we're talking about technology, software, that in a minute, a solution can be available in 100 countries. And companies, even before they go public, they're already serving people in 100 some countries. It's something that if you told somebody in 1905, they would say, this is nonsense. How is it possible?
Yes.
Right? Yes. It's a different world.
Yes, very much. This is partly why I am very skeptical of any argument. We've seen a lot of these about the economy lately. Most of the time when the yield curve disinverts, we get a recession. Right. And I'm not arguing that is true, because we can go observe the data. But what I would take issue with is there's an implicit assumption in there that, our modern economies that we're measuring to see whether or not they're in recession are reasonably comparable to those 8 or 9 or 10 or whatever the other times we're looking at when the yield curve disinverted. And I think it's not hard to go first principles on this, right? In the 100 years ago, first of all, we didn't have a huge services economy that we only tipped in the 60s, but 100 years ago, if I wanted a good, my ability to signal that took months to echo back to the supplier. And so you had this very inefficient movement of information where a supplier was either building things and they didn't know if anybody wanted them, or people wanted things, but they were signaling that it took forever to get them, or, we just had this. And then beginning with mainframe computing in the 50s, we started to aggregate demand signals and pass them around in a much more fluid way. And then over the preceding decades, then we started to aggregate supply signals and become much more efficient. And so now, I'm not saying economics has changed, but at a minimum, speed has changed dramatically. And also just the complexity and adaptability of economies has changed dramatically. I mean, really dramatic. I mean, even if you just think about a primarily goods-based economy will experience things like inflation in a wildly different way than a services-based economy. Services have a much longer shelf life than goods do, for example. And so my point is, when you say something simple like, well, most of the time the yield curve disinverts, we get a recession. I don't disagree that that's what the data said, but I do I almost want to say, to what degree are those other times comparable to our current time, and then discount that data with some factor, which, be almost impossible to come up with. So anyway, a bit of a tangent, but that's why I believe so much in thinking from first principles. Is I think it helps you sort of realize the assumptions you're building your logic chain on.
No, I think it's very true, but we're trying to learn from the past, and we think the future will be exactly like the past. But somebody reminded us that they rhyme; they're not exactly the same, right? So look for the rhymes, but don't look for.
I love was it Voltaire's line? History never repeats. Man always does. You can always look to history to know behavior. Learn how we behave, both well and badly. You have to be more skeptical when you look to history to say, how do we deal with an economy in the 1920s versus the 2020s?
Very much so. I think, for better or for worse, we don't really change as much as we think. And
I agree.
and reading, novels and plays and stories from 1,000 or 2,000 or 4,000 years ago, you realize we're so alike. Context has changed, right? But how we operate and what kind of emotions lead us through this life, they haven't changed. And that's why the markets in some way don't really change. We'll have panics, we'll have fear and greed, we'll have enthusiasm, we'll have rallies and bull markets. John, I want to ask you a related question about the economy of time as you talk about it, and time in general, and allocation of time. Can you talk about that dimension? It comes up a lot in the conversations I'm having on this podcast, but I'm fascinated with time, not just money, but time.
Yes, yeah, absolutely. Well, I mentioned earlier, my parents both died when I was relatively young. And so that, it's shaped. I was blessed to have phenomenal parents. And so I'm grateful for, all they poured into me, and even just knowing, even though they're no longer here, that they loved me deeply. It also impressed on me at an uncommonly early age how fleeting life is. And so that's been a theme, part of my development and growth has been just that constant reminder. Next year I'll be the age that my father was when he passed away. And so, I don't think there's anything special or haunting about that year, living to be that old, but it's just a reminder that, hey, we make it count. And so you're right. Time is a common refrain in my thought, and also just me trying to figure out how the world really works. I kind of often think and say, truth is how the world really works, not how we think it works. And of course, we spend a lot of time fooling ourselves and having to unfool ourselves. So we want to be truth-seeking individuals, and then wisdom is aligning your actions to truth. And so in, whatever endeavors I'm up to, including the investment partnership I run, I say we try to apply practical wisdom, and we try to think from first principles. And that's really where those thoughts come from. And so when it comes to time, it's a very interesting, if you think of it as an asset, it's the only asset where none of us know how much of it we really have. We can't, however much we have, we can't get more of it. And so when you frame it that way, you think, wow, there's, fortunately, if you know how to, work and serve people well, you can get more money.
Right.
And other assets, right? And so really, time is the ultimately scarce asset. And so when you're trying to unpick things like how will people behave, or what is precious to people, or how do we create value, a lot of that comes down to economy of time. You can reframe a lot of trying to understand the world and say, why did Walmart grow the way it did? Well, the economy of time for shopping in Walmart, when it was a relatively new concept where you could make one shopping trip instead of 27, whether or not that was a good thing is a completely different question, but you can understand why people will go there and say, this is amazing. Like, I can get 90% of what I need in one trip instead of 20.
Yeah.
That means I get more time with my family. Bezos likes to say people will always want, more choice, faster delivery times, and so on. And, those are things that don't change. The scarcity of time never changes. The value of someone figuring out how to compress time more doesn't really change. What do I mean by that? Well, it goes back to us creating value far faster today than we did 100 years ago. My wife and I, we don't have we're very blessed in all sorts of ways. And the big one of that is being health right now. But, we have a life that tens of millions of other people have. And we, have to spend very little of our time getting food and getting shelter and being able to communicate with that. These are solved problems that require modest means to have access to. And so the economy of time for this very moment is probably higher in our species than it ever has been. And unsurprisingly, we're creating much more value than we ever have as a species. And so, economy of time becomes a signal for a lot of things. Going back to the power laws idea, if you're trying to say, okay, if we're hunting power laws, where are we likely to find them? Well, generally, areas where economy of time is very high, you're generally able to create a lot of value. And so those can be very good signals for there might be a power law outcome here, because economy, we're seeing this in AI right now. And there are lots of reasons why it's hard to pick winners. And for the most part, I'm not trying to do that in AI in particular. But you can understand why people are so excited, is people have sort of lived this idea of you put something into ChatGPT and you realize that this would have taken months a decade ago, and now it just took seconds. And so that's why, that's economy of time. And so that's why it's prevalent in my thought, and also prevalent in a lot of ways that I analyze things and try to understand what's going on.
It's fascinating as a topic. And I realize, a lot of my conversations start with investing and money, and we end up talking about time. How do you spend your time? How do you get time back? And it's a great revelation. And you realize, we trade time for money. There are even expressions, time is money. And it became such a big part of our culture that we feel like it's a choice. Do I get the time? Do I get the money? And I have to buy one or sell the other. A couple of quick things that come up to mind in terms of innovation. And it was in a book, or somebody told me a story about a washing machine, how we would wash our clothes before and we got a washing machine, and you would think we got all this time back because the washing machine does it for us. But there's a catch, because we end up washing our clothes every other day or every day.
Yes.
And before we would wash them, every week or every other week,
right.
Or some things you would just wear on special occasions and wash even less. So we kind of speed up, but we don't get the time back. It reminds me of a question that my grandma asked me, and she was an accountant for most of her career. And she said, with computers that have those spreadsheets, and she left the industry before computers took over in a big way. Like, what do you do with the rest of the time? The computer does everything for you. And somehow she's right. Some of the things the computer does for me, I'm amazed what some of those tools can do for me these days. But somehow the day gets filled up with something else and something else and something else. It almost feels like we can't escape it until we really pause and think about how we spend our time, because it becomes a washing machine problem.
This is why values-based living is something I came across a number of years ago, and I'm a big proponent of it. We're all unique in our own ways, and so I wouldn't go so far as to say everyone should do it, but I'd say it's been, very valuable for my wife and I and our family. And a reason for that is, at the end of the day, there are people who want to spend meaningful time with friends or family or whatever it is. And then I think part of the washing machine problem is there are a lot of people who, for whatever reason, are, what's the line? Man's problems stem from his inability to sit alone in a room with his thoughts.
True.
And there are some people that you can see this, they're sort of terrified of not being busy. And I'm not making a judgment on what the right answer is, but I am sort of calling out that to some people, a washing machine is freedom of time to go play with their kids or something.
Right.
And to other people, it's the terror of time because now what will I spend my time on?
Right.
And I think the way I've learned how to unpick that is to know what our values are, which are really what we're trying to live out in the world. And when we frame things that way, we've spent an enormous amount of time and effort on that. And whenever you walk in my home, our values, our family values are right next to the front door, and they're also published on the web for others to see if that's helpful. But the whole reason we do this is we're trying to be clear on, here's what we intend to spend our brief time on this earth doing. And you know, it reframes everything. It reframes how we spend time, and also reframes the whole point of money, because really money is only useful to the extent that it can help us live out our values. And so we've learned we don't need that much of it. And so the trade-offs we make in the pursuit of getting it are colored by the fact that we know what we need, know what we're trying to amplify. And money is a piece of that, but there are all sorts of components to that. And really, time is the thing to orient around, not money or resources.
I love the sound of that. Can you talk more about the values? And I include all the links so people can look them up and read more. But what are the big bullet points that you wrote down that guide you and your family? Sure.
Yeah. So I came across the idea two places, and then I'll of course list what they are, but I came across the idea. So when I was studying corporate finance, I took a course on decision theory. And so this was poking at things like what's the basis for how we make any decisions. And one of the theories is we have values. Some of those we may hold internally, some of those we may not even know we have until we elicit them. But the anecdote that stuck with me was the professor said, if you are an options-based thinker and you're hungry, you go open the refrigerator, you see what's in there, you pick your most preferred option or your least bad option. If you're a values-based thinker and you're hungry, you think about what you actually want to eat based on however you define that, right? You might want ice cream, you might want a healthy salad, it doesn't matter, but you think about what you want first, and then you go to the fridge, and if it's in there, you eat it. If it's not in there, you go get it. And it's just a very different frame of engaging with the world. Rather than accepting what's out there, you sort of say, what should it be? And then you go get it. And so that stuck with me. The other thing that stuck with me is years after my parents passed away, my siblings and I were going through our family home that we grew up in, and we came across these things called the Candeto family report. My surname's Candeto. And it was these documents. My father was a stockbroker, and so he'd read company annual reports and thought, hey, that's an interesting idea. Let's try to apply that to a family. And so he wrote out, here's what we as a family exist to do, and here's how we're doing it, and here's our history, and here's what we're working on. And it was a wonderful way to kind of get to know my father as an adult, because I never did. I was 10 when he passed. But also I kind of thought, that's that the amount of intent behind that is fascinating. And so you put all the puzzle pieces together, and if time is really the scarcest asset we have, and we don't know how much of it we have, and we believe this idea of engaging the world through a set of values rather than just picking options is a good idea. And apparently I have a family history in doing this anyway. And my wife and I sat down and said, as we were on holiday one time, and we sat down with a coffee and said, okay, what do we value? And so we wrote out, it was very hard to do actually, we wrote out 5 pages, and then we went back a year later and kind of revised it, and we got it to 4, and we revised and we got to 3. It was a very iterative process, but eventually we got it to 3 bullets really, which are love God, do as you would be done by, and be wise stewards of what we're entrusted to. And then we kind of break that out. How can you be a wise steward of your body, of your mind, of your financial resources, of your other resources, and so on. So we break that out. But it's really love God, do as you would be done by, and be wise stewards. And so if you really want to know why I created the investment partnership I run, or why my family is doing other things we do, and so on, it's really trying to live out those things. And we put them by the front door. We put them on the web because we actually want others to see those, hold us accountable, challenge us. I'm sure we're wrong about plenty of things. It's very hard to see what you're wrong about. So I always love it when sometimes I'll get an email and somebody will say, this doesn't make sense. And I always learn something from it. I don't always agree with it, but I always learn something from it. This is hard stuff, but it's all our way of trying to be very, very intentional with the little bit of time that we have on Earth.
No, I love that. And it's important to write it down and look at it and see it, whether it's an investment philosophy or a life philosophy, and then tweak it as you go and find a way to express it in various ways that you live. But you touched on something that I really liked. I call it, well, you call it too, learning in public. And can you share? And also the concept of feedback loops that you bring up in your writing. How do the two coexist in your mind?
Yeah, the learning in public, I think I got that from Patrick O'Shaughnessy. It's certainly something he says often, and I'm very grateful for it, because I realized a number of years ago, I was thinking about things like economy of time and so on, and I hit a wall in my ability to evolve that, or I'll put it differently. The speed with which I could evolve that was limited to how quickly I could have conversations. Mm-hmm. And as I said earlier, I think at least in terms of capability for you and I as investors, or whatever else we're trying to get good at, whoever can compound learning at the highest rates for the longest period of time ultimately wins. And right. So if the goal is to try to become the best, gather the most truth and wisdom across the course of my life, then the question is, okay, well, what are ways to accelerate that? And so putting family values and writing about other things and so on in public, which I do very intentionally, that means the surface area of my ideas is limited to whoever comes across them on the internet. And I try to be very easy to reach and contact for this reason as well. And so the point is, I put these things out there. I think I've referred to them as bat signals, so they can repel some people but attract others, and ultimately create a mechanism to learn in public. So this is me trying to say, hey, here's how I think the world works, but help me out if you see something I don't. And then that's the feedback loop part, is I put it out in public. So that's, me kind of trying to learn publicly. And then also occasionally someone will come back and say, hey, I've got a different take on this. Hey, I think you're wrong here. Hey, and that's become this sort of flywheel effect of, I put something out, even just the discipline of putting it out sort of forces a degree of sharpness and so on that I think keeping it in your private journal maybe doesn't quite have. But then it also just exposes you to, the beautiful serendipity of the internet.
Things happen, and some synchronicity kicks in.
Yes.
It's fascinating, because when I give talks or when I write, I often tell people, this is what I observe, this is what I learn, but poke holes in what I'm about to tell you. And I'm not going to be offended. Maybe save it until the end so I can finish my point. But tell me where I'm wrong. And I say that, I don't have to be right. I just want to be the least wrong. And I think the more opportunities I can create for people to point out things that I'm missing, things that I don't have all the perspectives. I will never have them, right? We all have our own perspectives. But if you can show me something, I'm curious to listen. And I sat down with people, not, in many ways, because of this podcast, I have this conversation. I record a bunch of them and release every week, but it's fascinating how much I can learn just by asking questions and having conversations with people that I respect, admire. And within that hour, the audience says, oh, you're doing it for us. Of course I'm doing it for you, but I'm also getting so much out of it because, and I think my guests also get so much out of it because I have to tell you so many times after we stop recording, they tell me, you know what, some question you asked that I didn't even think about. They said, I wrote something that I never finished. It's in my drawer and I'm going to publish it next week because of the question you asked. And I thought, it's my little subtle way.
Yes.
Bringing up something to the surface that maybe somebody else will read. Maybe it will turn into a paper, a book, or something. Who knows, right? So an innocent question that just came from my genuine curiosity. I just wanted to know.
Yes.
You don't know how far it can go.
Very much. That's, not that, there's beauty in conversation and relationship that's of merit on its, it stands on its own, right? So I'm not in what I'm about to say, I'm not suggesting that everything ought to be measured by this sort of measurable framework, but it's
Right.
incredible economy of time, right? A wonderful question is a gigantic portal to wisdom.
Yes.
And, I think everybody's had the experience of being stuck on a problem or wondering about something. And sometimes years later, you hear a very simple question and it unlocks the whole next phase of understanding that thing. I keep a database of things that I call great questions. And that's according to, what I think is interesting. But I keep it in public on my website just because I that's more learning in public, right? I put it out there. I want others to benefit from it. Occasionally somebody will send me one. And same thing with quotes. I think quotes are phenomenal portals to wisdom. And if you're after wisdom, they're a worthy thing to collect.
I think that the future and the power is in questions. You brought up AI, and I feel like AI fills in the gap that the traditional education, whatever that means, to me at least, it was all about acquiring knowledge and then delivering it back, right? Learn the dates and the generals and tell me back. Learn biology and all the parts of a bacteria and then tell me back. And it was like I deliver what I collected. But I feel like the future is about the quality of questions. And and I've had conversations about it here as well, how when you think about it, an AI will get better and better. So the answers will get better and better, but AI is only as good as the question you asked.
Yes,
right.
Very much.
Who is asking
much.
the question?
Yes, yeah. I was with. I used to live in England, and I was with a very senior oncologist in the NHS, and he said something that stuck with me, deeply. He said that the problem is not that we need more therapies or drugs. The problem is we don't know how to apply the ones we have, and that really is getting at a question thing. Right? I mean, you can even just look at how our species has learned to deal with COVID, and people who would have died at the start of COVID are now living without even having to go to hospital now because we know what therapies, we know just better what therapies work and how to handle. And so I could not agree more. I mean, I often remind people that generative AI specifically, the more first principle stuff, right? So the way generative AI answers a question is it's this giant Bayesian net of probabilities that says, what word can I select as the first word in the answer to this question that has the highest probability of being the correct word? Right. And it does that and then goes through the loop again and says, what second word can I put in this sentence to answer this question that has highest probability of being the right second word? Right. And then the third word and then the fourth. The point is it has no idea what it's saying. No. It has no idea of the merits of what it's saying. It's still phenomenally useful and cool, but it is so far from reasoning about what we ought to be reasoning about. And so back to your point, so we basically massively scaled up mining a database of written language to answer a question. We still are the alpha predator in what are the right questions to ask. And those are, of course, both deeply intellectual and also deeply moral, deeply philosophical. And so I could not agree more. The need is in the asking.
I don't know how to frame it, but let me start from the middle. I'm thinking of, as I'm listening to you, I think we're both still of a generation that remembers paper maps. And, getting places and pulling over if you couldn't find it on the map and asking somebody at a bus stop or a taxi driver, where is that place? And then we all have navigation of all kinds on our phones that takes that responsibility away from us. We don't have to know. We don't even have to know which way is north, which way is south. We don't have to know any of that. We are zoomed in on the little screen that shows us just the next turn and the next turn and the next turn. Yes. Now, in many places this works. In the US it works, in Europe it works. If you take one of those Google Maps or Apple Maps, not hating on anybody or loving anybody too much, but outside of the US, it will get you in trouble sometimes. I have had the experience in many places that are more exotic, let's say, right? The maps are not as good. Kind of a reminder that you do have to look outside the window and see if this is a real road.
Oh, yes.
Right?
Yes.
So I think where I'm going with it is that you do ask a question.
Yes.
But you have to know enough to know if the answer makes sense at all, right?
Yes.
So if I asked AI about Napoleon's battle, and it gives me a date that's outside of Napoleon's lifetime, right? I know enough to know this doesn't sound right. Like 1215, Napoleon wasn't around. Something got wrong in that question, right? But I know enough. I don't know the battle, the exact, that AI can still, give me the wrong answer, but I know enough to narrow it down which kind of an answer would be the wrong answer.
And what it will never know unless we give it some of this, and then we can debate whether or not it can reason through this, is so take Google Maps. Google Maps cannot, and Google sort of famously has chosen not to answer the question, I want to get from here to there, and I want it to be the most beautiful walk possible. I don't care if I get there the fastest way.
Right.
And it will not answer that question. It will give you three options to get there in the three most efficient ways, and that's it. And so if you're somebody, as I know you do, I do too, like values a beautiful walk.
Yeah.
Like, technology isn't answering that yet. I'm not saying it can't ever. You can imagine a world where it could, but even knowing that the merits of a beautiful walk, that's a very human thing.
Yeah.
And so we can train technology to help us with that, but that starts with, we first had to know to ask the question, or know that it's valuable, or know that we value it, which are all domains. I would say the AI in the long run, I think, is just going to make us more human. And the uniquely human things are creativity and relationship. And that's, I could be wrong, but I'd be surprised if any of that really gets meaningfully replaced. I think the other things get replaced, so we get more creative and more relational. At least that's my hope.
I think these are very powerful tools, and I think they will have an impact that we can't even foresee. I think the way we get educated will continue to evolve. I think it has already evolved in many ways since I went to an actual school and sat at a desk. But I think we will raise the bar even more, and I think it will be more about questions rather than recording knowledge that you can look up easily online these days, and it's pretty reliable if you know how to look for it. I think looking for answers is much more valuable to me, that ability, than you remembering by heart, I don't know, 10 years worth of financial statements with ratios. It's like, why would you spend the time to memorize that if I can pull it up in 2 seconds, right? So I think that's going to elevate the conversation.
Yes. One, I'm forgetting the name. One, there's a famous scientist who suggested the notion that the most difficult problem in science is understanding the right way to look at a problem. Which is another version of this question thing, right? So if we knew which question to ask, we could probably answer it, but the scarcity is probably more on the question side than the ability to get answers.
I mean, in the simplest way, I remember having interns, and they would walk up to me in the morning and they would say, the stock we were looking at is down 10%. And I would say, is it good news or bad news? And they would be like, well, it sounds bad. I said, well, we were planning to buy it. It's 10% down. Is this good or bad? Well, right. So you have to keep on reframing what you're actually asking, not just saying, it's down 10%, it's bad.
Yes.
Right?
Well, then there's a whole, back to the epistemology point. So then there's a whole point of down 10% in what? Yeah. Right. And that's a whole, I kind of think of this as numerators and denominators, right? And for the most part, we spend 99 point something % of our lives focused on numerators. Yeah. So that stock was down 10% in, Japanese yen terms, right? Or US dollar terms or whatever. Well, if you've looked at the history of the yen or the dollar or whatever, that, or really the history of money in general, that there are very few forms of money that have echoed for more than a few generations. There are some, but the denominator, whether it's dollars or something else, is also a point of risk. And so, or you see this in crises, right? Where the GFC US debt got downgraded and went up in value because it was the least dirty shirt, in the laundry. And so there's this whole thing where I try to remind myself there's a numerator problem to solve, but there's also a denominator problem to solve. The survival portion of investing for me, I spend a lot of time both on numerator and denominator. And it's because I'm trying to, if you're trying to answer that survival question, you've got to know not just what's getting measured, but how it's getting measured and where there's, risk in both.
Well, I have to say this as I'm listening to you, because people get excited about Bitcoin going up. And I say, up in what? Right?
Yeah, sure. Right. Yes.
Because you had that many Bitcoins and you still have that many Bitcoins. What has changed? And they say, well, in dollars.
Yeah.
But it sounded like you don't care about the dollar, so why would you care that it's more in dollars?
Very much. I
Right,
read,
so-
I've not fact checked this, but I read somewhere the other day, the price of a high quality toga in ancient Greece was like an ounce of gold. And the price of a high quality suit in the 1920s was an ounce of gold. And the price of a high quality suit today is an ounce of gold.
There you go.
And, assuming that's roughly right, then you kind of really start thinking, did I need the suit? Did I need the gold? Or ultimately, this goes back to what you value, right? It's and it's not that there's a right answer. It's that, think about denominator as well as numerator.
Preserving the purchasing power. That's the first thing you want to accomplish. And you brought up gold. I have another question, but I briefly want to tie it back to one you mentioned about survival and that kind of optionality that something could be compounding your wealth over time. And you phrased it beautifully how you want to tap into those trends or tailwinds in a way. The way I think of it, that it's a beautiful thing that we get to own a couple of shares or many shares of an incredible business that will do an incredible job over long periods of time. And we might be able to afford not just one toga or one suit, but maybe 100 of them after a longer period of time. And that's the mind-blowing part of compounding, investing, and benefiting from what we were talking about throughout this conversation, right? Like it's an
very much
open-ended opportunity that we'd love to capture without risking getting kicked out of the game completely. I think that's if you look at it this way, you can get really far. I want to briefly ask you about family stories, which is a topic in itself, before I asked you about structure and serendipity, something we touched on briefly. The reason why I want to ask you about family stories, I work with families that have had wealth for many generations, and some of them aspire to have wealth over many generations. And I realize the power of the stories. There's a capital, there's wealth, but I think the stories create this framework, the glue that keeps this phenomenon going. I really believe that a family fortune is a miracle. The fact that there's any inherited family fortune around these days, it's a miracle. And there are stories behind it. And you talk about family stories, and you talk about the idea of writing family stories for each of the years. Can you talk about it? I think it's a beautiful idea for a lot of people, including myself, to consider as
sure.
Practice.
Yeah. So this was part of us kind of trying to figure out the family report thing, which the basis of that is our family values. And so on a regular basis, we try to basically say, are these the right values? And when they quit changing year to year, when they quit, eventually they haven't changed in years, which was sort of how we knew that those were the right ones. But so there's the values, but then there's how are we living out our values? And which is another way of saying that's our family history. And so my wife and I tried to spend some time each year and write down, really answer that question. How did we live out our values, over the last year or so? And something my father did as well. And there's a lot I could say about it, but a piece of this is Paul Graham has this idea of there's a kind of thinking that can only be done in writing. And if that's true, then there's sort of intrinsic value in just the act of writing. I think we learned from Stephen Covey years ago, whatever you do, you actually experience it at three times. So you look forward to it or you anticipate it, then you actually experience it, and then you reflect on it.
Right.
And so we try to make the family stories, at a minimum, it's an exercise in gratitude where we reflect on, what's happened, ideally learn from it, often just be grateful for it. A wonderful little, hack or whatever we figured out years ago is the screensaver for our television in the home is it's just family pictures, and it just kind of cycles through them, and it's really for us, but it's really an exercise in gratitude to be able to look back and see our kids grow up and see the things we've been able to do. So, what's happening behind all that? I hope it's nudging us towards continuing to learn better and better how to live out our values. I'm certain with our kids who are 7 and 4, so they're young, but it's building culture within them, largely through demonstration. And ultimately kind of hopefully teaching us more and more how to live out our values and in a way that hopefully that echoes for a while.
No, I love the idea of just sitting down and writing a family story year after year, and just looking back. And I like this concept. I don't know who proposed it, of a gain and a gap, how we look at the past, the present, and the future, right?
Yes.
The gain in the sense of what you've already accomplished. And I think that invites a lot of gratitude for look where you are already. And the gap, I think it puts us in an uncomfortable place, because it's always things that we wish we had, but we don't have them yet, whatever that means.
Yes.
And maybe it's motivating in some way, but I think a lot of time could be spent on the gain part, which is the kind of report that you talk about. And it obviously rhymes with the corporate annual reports, where companies say this is what we've done this year. And I think it's useful, it's helpful, and it reminds you, are you aligned with the values that you have and going in the direction that you chose?
Yeah, it's also related to that. Our friend Luca Delano would say one way you know a decision is a good decision is if it makes sense across different time scales.
Yes.
And so, if you can optimize something for a day and 10 years, you're, and so we definitely get a piece of that where it just forces, when we're reading our family history from 10 years ago, I've largely forgotten a lot of it. And so to be able to go reread it and see how we've changed since then and how we haven't is very helpful. I would say a phenomenal gift. I don't mean like that we gave to ourselves. I just mean just useful in that sense. And so the ability to kind of experience those different timescales as we look at how we're hopefully, improving over time has been a blessing.
I love that. I think it's a wonderful practice. It's like journaling, but once a year as a family.
Yes.
I do want to ask you about your definition of success, but before we get there, I'm very intrigued by the concept of structure and serendipity. And you brought up the word serendipity earlier. And I feel like our world is a lot of structure and then quite a bit of serendipity. And you have some thoughts about it, so I'll let you share.
Oh, yes. Yes. So if I had met you 10 years ago, we would have gone back and forth a lot on how to schedule this time. And I probably would have been getting off an airplane and booking into a hotel and doing this podcast and then getting on another airplane. And now I think we proposed one date and here we are. And I feel very, very grateful to be able to do that. My point is I flipped from every minute is scheduled to most minutes are unscheduled. And I did that. And again, not saying this is the right answer for everyone, but for me, what I realized is I would constantly stumble across things that seemed important to me and have absolutely no time to do anything about them.
Yeah.
Even at one point I was traveling so much, my health wasn't that great and I wasn't eating very well and all this. And so that's a very simple one. But then, even just investing things, right? Something would happen where there was an opportunity to buy a wonderful business and I didn't have enough time to sit down and do the work I should do before, calling the broker. And that was before I was managing others' money. And so it was sort of to my own detriment. But what I realized is, I was listening to a podcast with Rick Rubin, who's worked with Tom Petty, and a point that he made relevant here that stuck with me is Tom Petty kind of famously wrote his song Wildflowers in like 10 minutes. And Rick Rubin said what people misunderstand is he did write it in 10 minutes, but he didn't get to pick which 10 minutes he wrote it in.
Right.
And so there was something magical about the 10 minutes in which he wrote them, but most of his songs he worked on for months, sometimes years to get the thing out. And so my point is, we know serendipity will strike, and whatever the source of it is, we could debate that. But if you have an ability to chase that, you can take advantage of it. If you are constructed in a way where you can't, we kind of know if you don't grab it, it often doesn't return. And so I try to sort of have lots of time to be open to serendipity. That's in relationship with you, how we met through our friend Tom. That's in a thought I might have that I can sit down and write about it. That's my ability to go read Shakespeare instead of an investment report because I'm not watching the next quarter. And so point is we need to be constructed to take it seriously and be open to it. And then the kind of framework I wrap that around is I think you could frame most things, whether investing or building a business or serving clients or whatever. There's a search function and there's a climb function. And so the search function is you're looking for what's the right next action. And sometimes you have to search a long time. But when you find it, you then have to switch from searching and start climbing or start doing.
Right.
And so, serendipity fits in there well. If I kind of think of, when serendipity strikes, the search function has found its target. Now let's go climb. And I think the only way, at least I've learned to take any of that seriously, is you've got to have be constructed in a way where time-wise you have the ability both to search and to climb.
I love that. And in a way, without the right structure, you don't have the time for a serendipity. And if everything is serendipity in your life, then you have no structure. You kind of have to find a place that works, right? If your entire life is so structured that from the minute you wake up until the minute you fall asleep, there's no spare time, no slack. I wrote an article about slack and time. I find it fascinating that we do need slack. There are days when people think that I'm sitting and recording all the time. I do sprints and I record a couple, and then I have a week or two with nothing. Right. And I love having those days when there's nothing scheduled, where I find something that intrigues me. And I download a bunch of annual reports, and you see me, I'm lost for hours trying to make sense of this particular business. And then a client needs something, and I need 2-3 hours, and I totally dive in. We have 2-3 calls. There's something that needs to be addressed right away, and I give them my full attention. But I need those times available. And, it's a beautiful dance between the structure and serendipity.
Very much. I think people... it's often not taken seriously enough, the idea, this is sort of a first principles argument, but all of your thoughts are going to be downstream from your flow of information.
Right.
And so whether you're reading reports or you're talking to clients or you're having a coffee and watching the world go by, whatever it is, downstream from that is what you're going to cook up. And so if you only sat in a room alone with nothing, you probably wouldn't have much serendipity, or you're drawing on things from years prior to sitting in that room. And so you sort of have to feed the engine and then also take the engine seriously. And so I another thing I do is I write down, not all of it, but I write down my information flow. I write down all the people I talk to and kind of what we talked about and so on. And that's just my way of trying to be intentional with, intentional with time, honestly, but also knowing that whatever I think tomorrow is going to be downstream from what I did today. And so I sometimes will look back on my information flow and realize it's been skewed too far in this direction. And I know my thoughts are going to be boxed by that direction that I've been in. I need to grab some stuff from over here. Same with people. I obviously hang out with a lot of folks who manage capital, and I really enjoy their company. But one of the things I love about having built a business before becoming an investor is I also hang out with a lot of business builders. And so I sort of naturally have this foot in people building things and foot in people investing in things. And I think the ability to do, what's the Buffett line? I'm a better manager because I'm an investor, and a better investor because I'm a manager. So, the ability to kind of just be intentional about that kind of diverse information flow, because I know whenever a good thought or serendipity strikes, the source is going to be its predecessors.
No, I love it, and being in multiple worlds at the same time and connecting all the dots. I was going to ask you real quick, what's your system? Where do you write things down? I do that too, but I'm always curious how people do that.
Yeah.
Ideas, conversations, how do you keep a record?
I'll preface this with, I'm a prolific trier of, I think I said earlier, I learn through experiment, and I mean that in the broadest sense. I don't experiment with morality, but everything else is sort of an experiment. And so I've tried many things. I'm a prolific user of Notion for certain things. So for example, I could tell you every meeting I've had in the last few years, and so then you can analyze it, right? Because then you kind of get a sense of how much time are you spending in meetings versus thinking and writing. And so I found Notion useful for things like that. I have a Google Doc that is just a journal that I've experimented with breaking things apart and putting them back together. And I always come back to, if I need a journal for this and a journal for this and a journal for this and a journal for this, at least for the way I think, that sort of starts to assume that these things don't communicate.
Right.
And that's sort of buying the reductionistic zeitgeist of learning that we're in. And so I've mostly come back to, what was good for Ben Franklin is good for me, where I have a journal. My current one is a Google Doc, and it's pretty long, but it lets me link to things because that's useful. I'm a big fan of mind maps, but eventually I try to just cram it all into one journal and then get a sense of, okay, here is, here's my thinking expressed through writing. How about yourself?
I'm a big fan of Notion. Actually, as we were speaking, I have my Notion open with notes and
Likewise,
questions. Yeah. So, and I've tried many different, I'm forgetting what else I used, and I think it's very personal, so it has to rhyme with how you operate, but it's very moldable, Notion is, and it serves many purposes. And I feel like this podcast would not be possible without a system. And I brought it up a couple of times. I feel like if you do something, one off or twice, that's, you can improvise. But if you're doing something regularly, and whether it's stock research or client meetings or running a podcast or, writing regularly, you need to have a system, and you need to have tools to run a system, because otherwise it won't happen, at least not for me.
Yeah, I very much agree. One lesson I think a lot of people, myself included, have learned the hard way is it is more useful to have a system that gets enough usage where you can actually be thoughtful about what you did and didn't do and should and shouldn't have done than it is to have the perfect system.
Right.
I think I've used Notion for years now, and before that it was Evernote, but I think I've really sort of changed the fundamental system only 2 or 3 times. And I've experimented with many other things, and they're almost always better point solutions for pieces of the puzzle. Right. But there's a lot of merit in having most of the puzzle imperfectly, but in 1 or 2 places, so you can look at the whole thing.
It's a brilliant tool, and I'm sure there will be more innovation. I'm open to keep on experimenting, but I used to have a piece of paper in front of me on my desk and write down things, and having a paper journal and so on. But I feel like there are tools that make this experience much better. John,
and there's also a thought I think often, which is downstream from sort of understanding that the world and humans are complex adaptive systems, is success is iterative. And we see this in businesses or with people. You kind of study, any student of history of anything sort of realizes the alpha version was less good than the beta, was less good than version 1, and on and on. And so I've tried to take that seriously with ideas. And so I very often have some paper around me, and I have notes on my phone, and so on. But when something eventually gets published as, a client letter or something like that, it's generally been all, the kernels of the idea have been on a whiteboard, and they've been on a note card over here, and they've been all over the place. And I think that's just part of the process. I mean, I often wonder, Walter Isaacson, he's biographied quite a few successful people these days, and he has commented, somebody asked him who had the best mind of all, Jobs and Musk and on and on. And he, without pause at all, he said the founding fathers of the United States.
Wow.
And they said, why? And he had a very elegant answer, but, if he's right on that, say they had pen and paper, and they were all like basically our age, which is terrifying. But they weren't 90, and they didn't have technology as we know it, and so I kind of think if they could do what they did with pen and paper, I think that's the thing to take seriously. The Grahamian notion of there's a certain kind of thinking that can only be done in writing is probably more important than Notion is better than G Suite or whatever.
Very much so. Pen and paper. John, before I let you fly away, I really want to hear your definition of success. I know you hinted a little bit before we hit record, but I want to hear all of it.
Sure. The short version is living out our values. Mm-hmm. And that's why I believe so deeply in values-based thinking, is kind of how I choose to go spend my time after we record here. I need to root that answer in something. And, there's an enormous amount of human history, that basically the answer has been rooting that in hedonism. And there's also an enormous amount of history that kind of tells us that we ought not trust all of our desires. And so if you're trying to find the logical toehold on how do I allocate, ultimately the scarcest resource of all, which is time, for my family, it's been, what are our values, and let's live them out. And then so downstream from that, when it comes to how do I, manage an investment partnership that is living out my values, well, one of them is, do as you would be done by. So you can get to very useful, helpful answers by thinking there are 23 people, mostly families, whose wealth I'm responsible for, or at least responsible for a piece of it. And if they were sitting in the office over there, what would be a wise next action? And there are many answers to that, but if you invert it, there are also many bad answers to that, right? And so, the combination of, how do I serve them well because I'm trying to do as I would be done by, and understanding, the balance between serendipity and structure and the search versus climb function. And some of the other stuff we talked about, I believe businesses are complex adaptive systems, and it tells me a lot about what kind of behavior I expect or what I believe is knowable versus not knowable. Putting that cocktail together, out the other side comes an answer that, hopefully it is, okay, this is consistent with my values and how I believe the world works. And so we're going to go take that action.
Well, I love the sound of that. I think it starts with values and everything else follows. Mm-hmm. And remembering those values helps in whichever way, putting them up on the wall above your desk or wherever you can look at them. That's helpful.
Yeah, I've got you can't see this obviously, but my background on my computer desktop is just pictures of all the people I serve. And I found that very helpful because the first thing I see when I turn on the computer is the faces of all the people I serve. The last thing I see before I turn it off is the faces of all the people I serve. And so, if you wanted to boil the answer down even more simply, it's serving my clients well in the business context, at least. In the family context, it's serving my family well. In the friendship context, it's serving my friends well. In a word, it's service. And to pull back our friend Luca back into this, that's something where I can optimize for that, whether I live another day or whether I live another 100 years.
Right.
And I found that very, very clarifying because obviously in investing, we're often thinking about doing things today that we may not see benefit for until 5 or 10 years from now. And so sometimes it's hard to kind of think, all right, maybe I shouldn't play with my kids today. Maybe I should work harder on investing so I have more time to play with them later. And obviously there are no easy answers here, but I think there is a lot of clarification in, well, actually the answer is both. And you've got to figure out, I have a responsibility to serve my kids and my family, and I have a responsibility to serve my clients. And you can answer that in a way that is consistent with today and a decade and a century. And so that's, if the word is service, then the challenge is acting on it. But that's the answer.
I think it's a beautiful way to put it, especially in our profession, because I think a lot of people get into investing to find stocks that go up. And I remind myself and my clients that it's all about them. Whose money am I managing and who am I actually serving? Yes, we're looking for stocks that will go up in simple terms, but who are we really helping and how? And I mean the direct clients and their kids and their grandkids in some cases. And it's fascinating what kind of an impact the work that we do can have. So it's a wonderful reminder to remember.
Very much. Yeah, and there's an interesting uncertainty is often, the fact that we don't know if stocks will go up, down, or sideways tomorrow or the next 5 years or the next decade. We know what they're likely to do, but the fact that we don't actually know, in some ways there's a beautiful clarity in that because, you and I and others in our position, I think many people really, we have to act in a way, it is possible to have a wonderful outcome for an investment firm that doesn't do that well.
Right.
Now, of course, we want to do well. We'd like to do phenomenally well. But I tried to, before I decided to kind of go into this profession, I sat down and tried to answer the question, if this is just a disaster, financially, if the stocks don't go up as we hope they do, what would a good outcome still look like? Yeah. And all of it came back to who I served and how I served them. And so I've tried to very much optimize for that. Even when we're considering a new client, we have a two-way interview process where I ask them to interview some of our current partners, but then I ask to interview some of their business partners, because we really, who we go through life with and how we go through life with them is really, it's the stuff life is made of.
Yes.
And so we don't know, success is not guaranteed, but we do get to pick kind of who and how. And I think focusing on those is very clarifying.
I think it's a beautiful lesson for people in many businesses, but the clients that you choose, or the clients that choose you, will make your day wonderful.
Yes,
and you will make their day wonderful if you put a little bit of effort in it.
Very much.
John, I could keep you here all day, but this was such a wonderful conversation. We touched on so many topics. I'll include all the links in the notes to the episode so people can explore more the work that you do, the writing, and everything that you share with the world as you learn in public. But thank you so much for today. This was really special.
Absolutely. Thank you so much. I appreciate you hosting me and the wonderful questions and conversation. So thank you.
Thank you so much. You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogumil Baranowski.